Good morning, everybody. Welcome back to the Elite Real Estate Podcast. And I've got a very special guest in this morning. Oh man, it's great. And I can see it on camera over here, and it looks even better on camera.
Is this my camera here?
Yeah, your camera's right here. Yeah. So Jason Kaleta, Mortgage, my man.
Good morning. Morning. Thanks for having me.
For sure. If you can't tell, we're in Detroit, but you're heading out to the game today.
Yeah. But taking off about 11 o'clock this morning. The wife and the kids, we're gonna make the truck and go join probably 50,000 other Lions fans down in Cincinnati.
Yeah, I mean it's cool because one thing is that we, I don't want to get too far off on this down the Lions rabbit hole, but what's changed in the city, as far as the Lions goes, like how about everybody travels?
Yeah,
and you're in Cincinnati, so it's what, 5 hours?
Yeah, I think it's like 4 hours.
4 hours.
4 hours. Yeah. They put a few of these out. Well, we're lucky because Chicago's the same way. So we have a few set in Indianapolis. So when the schedule comes out, I think a lot of us, with us being in the Midwest here, we have typically 2 or 3 different choices where you can drive there.
Yeah.
Some people I know are driving Saturday night, going to the game. It's a 4:25 game and driving right back and going to work, Monday morning. We're staying the weekend, but we're lucky with being so close to, a few of the major cities, Minnesota, Buffalo. There's all, 4 hours away. Pittsburgh, it's always 4 hours away. So took advantage of it. When the schedule came out, we kind of pinned the game. It's my wife, my 2 kids, my daughter's boyfriend and my son's girlfriend, but my brother's going with a couple of his coworkers. So I know, just like in our little group, there's probably 20 guys. Yeah, I heard about others. So I would probably know 40 people just myself that are going to be down there.
Yeah. And I'm sure that grew because, like you said, we were chatting a little bit before we started, that it's the tickets got more affordable. Cincinnati's not very good. So
right. Yeah, they were supposed to be good though. Root for anybody getting hurt, but maybe the best quarterback in the league got hurt. So our tickets are literally $200 cheaper than they were a month ago.
Right. Yeah, before he got hurt.
It's time to save being cheap.
Yeah. Al says, WTF, I thought that was his hair. So no, Al,
I can grow it this long, Al. Yeah. I can't believe it.
He actually does have hair, Al, so Jason could do that. Oh man. So Jay, you've been out with us before, and but man, like you've been in the business over 20 years.
Yeah.
Hill Mortgage, and you're my guy, right?
Yeah, thank you.
What's going on right now?
Tell me. We were talking about it before that. I guess it's still a buyer's market, but some of these homes I'm like, why is this house not selling? I did an open house about 2 months ago now. I'm not familiar with the area, but it was out this way. Perfect house, $399,900, 4 bedrooms. Didn't need it, not a damn thing done. The guy, appliances, everything was included. The guy was clearly a handyman. Built a nice sauna in the basement. That weekend we had one person come through, and this was I think it's the beginning of August. So I ran into the agent about at our lunch a couple weeks ago. Say, how's the house going? He's like, we had it sold, and then the financing fell through. He's back on the market. He's like, I can't get anybody to look at it. I'm like, you got to be kidding me. His name's Ed. I said, you got to be kidding me. He was like, I don't know. I got it priced great.
Yeah.
Taxes are low. It's in Sterling Heights. Taxes are low. I just can't get it sold, and I don't know why. And I'm hearing more of that. I really hope we keep on the rates. I'm sick of hearing about the interest rates. Sorry about the negative, but that's not the case anymore. Rates have been this high longer than they were that low. Right?
Yeah.
They were only low for a year and a half, maybe 2 years. We've been this way for 3 years now.
Right.
They are what they are. We're in the first-time home buyers. There's different incentives, but if the rate's holding us back, You know, you guys know better than I do how to get the buyers pushed over that little bit. You want to call it a hurdle, over that little bit of a hurdle. But to answer your question, I don't know.
Yeah.
When people ask me, I don't know. All right, this is coming off, guys. I get too itchy. my headphones keep slipping. There we go. Right.
Well, he brought the helmet. Like
Yeah.
he got the helmet
Yeah,
too.
it's custom made.
So the Hill Mortgage helmet.
Yep.
Lions colors, but Hill
Yep.
Mortgage helmet.
Yep.
And gotta love that. So that's a view too.
Yeah.
So, but yeah, I think the market's the market, right? Like if you look back in the history of the United States, even in the worst of World War II, people were still buying and selling houses.
Yeah.
So it doesn't, we went through a pandemic,
right,
where the market went absolutely crazy.
Yeah, right.
You know what I mean?
Yeah.
So people are always going to buy and sell houses.
And I saw somewhere that the home prices have only dropped 2 times. It was the Depression and in 08.
Yeah.
It was, and every year they don't climb up like they did in through the pandemic, but every year, as you guys know, 1%, 0.5%, 2%, whatever the case is, but it's always still an investment. I always say I don't want to sound too salesy. I don't want to sound, pushy, but worry about the interest rate later. But when I talk to people, they don't, the difference it makes on a $300,000 house from 7% to 6.5, you will never miss that money.
Yeah.
To be blunt, you'll never miss that money. It's, we're talking 60, $100 a month, maybe. Something like that. Well, first thing I get 6.5.
Yeah.
You can, but
Well, and then the other thing is too, like, when people are talking about not buying because of the rate, or, not selling because of the rate, or this, that, and the other, the funny thing is what people don't understand is this got brought up yesterday. But it was, all right, so you're going to list out on the $20,000 equity gain. Yeah. And so you're really losing 40.
Right.
Right. You know what I mean? So you're really losing $40,000 if you do the math right.
And just, always the, I guess, story I use is you don't want to be, if you're starting a home and it was too high. We waited. And then 3 years later, drive by and there's a family in there with a playscape in the background. And why don't we pass on that home? You know what I mean? Like it sounds, dramatic or whatever, but it's the truth. It's, I'll tell you a story. We bought our house about 13 years ago. The first house we looked at, it was, and we still drive by it. It was like $20,000 or $30,000 over our pre-approved amount, and we still drive by it. And we're like, man, that was, we love where we're at, and actually we got great neighbors too. But we still go around, so I can imagine people that pass up on the house. Oh, that was a great house. Why didn't we get it? Oh, because the rate was 0.38 higher than we wanted. It's like, okay,
that extra $20 a month.
Right, $20, and in the meantime, you passed on it. Now the taxes are higher. Now that now the price went up 10% or whatever the case. So, it's the biggest investment in your life. Yeah, make a decision. Okay, well that's fine. I'll just keep renting for $2,000 a month. Right. So,
well, you're right. But it's funny. It is, the market is I think the market softened a little bit because we can see the inventory's up. Yeah. Right. Yeah. It's not up. Like people are like, oh my God, inventory's up. I'm like, it's still only a month and a half inventory. Right. It's not like we, back in the day, right? When you had 3 months of inventory.
That's what I was going to ask you, because that stuff I don't follow too much. Like, what was the biggest?
Yeah, like when there was 3 months of inventory, like, you could take a buyer out, go look at a house, then go back with like their parents, and then go back with like, you could go back 2 or 3 times and visit a house, right? But and then we went through this phase of we were writing offers before we even saw the damn thing, right? Like we were like, just send me a pre-approval. We're going to see this house. Yeah, right. Like I'm sending my stuff. Like, and so it's still is happening. It was the weirdest thing. I had a listing this week. It went live last Friday. Went crazy. I have 5 offers. We went 15,000 above asking. I had an appraisal guarantee. Wow. The funny thing is, I had to coach the agent through the appraisal guarantee. She didn't know what it was.
The other side,
the other side. She didn't know what it was. But I'm like, I like your offer, but I go, we have to have some sort of guarantee with this thing, like, because I could write it for $1 million.
For sure, exactly.
It's only going to do with the appraisal, I guess, though, right? Yep. So, and you and I have had that discussion before about appraisals. Where are you seeing appraisals at now?
Yeah, I haven't seen. So I haven't had any issues. We had one. It actually worked out for the buyer, but it came in super low. Went back and forth, and I said, "This is this principal, it's legit. It ended up being priced too high. The house was gorgeous. It was just the nicest house in the area.
Right.
In the area. Look, we talked earlier about your guy with the Harley, and
Yeah.
it was. I mean, these people did everything. It was the same size, but they put in top end, and they had so much money into it, they had to sell it for a certain amount, and it just didn't. The comp size didn't support it.
Yeah.
That's about a month and a half ago. But other than that, I haven't had any. Me personally, I haven't had any issues. Everything's been pretty. Pretty on. Just closed one in Roseville on Monday. On Tuesday, and actually came in about 22 higher.
Okay.
He got a deal on it, but it came in 24 hours. So I haven't really seen.
Yeah.
Really seen
I just had like, I don't know if it's official or not, but I had like the third highest sale in Roseville of all time.
Really?
Yeah. 365.
Holy cow.
Yeah.
Holy cow. Wow. That's awesome.
Which was my neighbor, which was great for me. Yeah, it was my neighbor, which was great for me. But the funny thing is, I wanted to ask you about that too. I had John. From a mortgage standpoint, and what the banks are looking at, right?
Yep.
So this particular house, kind of like you were just saying, like it was the nicest house in the neighborhood.
Yeah.
And the risk, what I got back on the one in Roseville was the risk, the 1 to 5 on the risk, right?
Yeah.
And this one, mine came back like a 4.5.
Okay.
For riskiness.
Yeah.
Because it had a pole barn, it had another shed, it had 2 lots.
It's not common, right?
Right. It's not common. So what is that like on your end on the mortgage side?
Yeah, kind of say usually everything's explainable. So something like that, underwriting typically comes back to us and says, okay, this house has a pole barn. There isn't a pole barn within. Get me something closer. It's 7 miles out. Great. Give me a 7 miles out. And then things like that we can usually explain. The hard stuff is like an in-ground pool inside the house, which is rare too. I know there's a couple in Roseville actually.
Yeah.
But those are, how do you price those? Do we put an extra $100,000 in the house because it's got an in-ground pool?
Right.
Some people don't like that, but typically if it can be explained, my experience is it's been, all right, well, give us a little more explanation on this. Why the pole barn, and then, or give us a pole barn listing the 7th comp 10 miles out and to use that. I haven't had much experience with that, but that's typically how it goes,
Yeah.
I'm trying to think of another odd example, but as long as we could pull something. The one I was telling you about, there wasn't any. I mean, it was in Clinton Township, and the closest one we had was like Birmingham, which I know, what is that, 10 miles apart of Birmingham?
Yeah, 10.
Birmingham. Yeah,
10, 12, yeah.
They were like, no, and at that point, you got to go back to your buyers and the buying agent.
Yeah.
Like, let's all talk here because we can keep fighting this appraisal, but ultimately you're paying that price. It was about $100,000 high.
Yeah.
Like, if we get some, explain this and pull some comps and get an underwriter to sign off on it, and you got to sell this thing in 4 years, the next person might not be able to get this stuff signed off on it.
Right.
And you're on the hook.
Right.
And it was a gorgeous house. It was, but it was too bad. So
yeah. Well, now we see the same thing too, and this is another issue that we're seeing, and I know you're seeing it on your end, is like these taxes.
It's so crazy.
And when you're uncapping these taxes, the one in Roseville, the uncap $11,000 a year.
Oh man. Yeah.
I think it's another house payment.
Right. And that's the one, right? The one bad thing. My property value shot up. Well, guess what else is shooting?
Right.
It is.
And this was, so the other issue with this one was, that was the original owner. So he built the house in 1973.
Oh, yeah.
And he passed away, and the kids were selling the house.
Yeah.
So this uncapped from,
Sure. Yeah, for sure. And on our end, on the lending end, I'll speak for myself. I asked that question about how long do you seen that they've owned it for 27 years? Okay, let's get the title company involved. Let's get the millages. I can kind of give you an idea what I think they're going to go. There's a bunch of tools out there.
Yeah.
What I think the millage is going to be, what your taxes are going to go. Your first tax bill is going to be this. Let's say $4,800. Your next tax bill is going to be right around $7,000. So let's project that into your. I don't have to include it now into your debt ratio, but for you guys to know that your payment's going to go up another $200 a month or whatever the case is, let's make sure we can afford that. So
yeah.
Have your agents or have your lenders do that. If it's a case, they've owned it 2 years, it's probably not going to change.
Right, not going to change much.
But yeah, keep it in.
But that's one of the things, and that's one of the things I appreciate about you, because, and if your lenders aren't doing this, right, and providing that information,
yeah,
because the sad story is 2 years from now, the person you got into that house calls you and says, I got to sell, I can't afford it
Right.
anymore.
Or I get an escrow shortage and my payment went up $300 a month and I owe them $3,000.
Yeah.
Or whatever, whatever it is. Yeah. And it's a question that we feel
Yeah.
bad. So I try to get the title company involved. In case it's wrong, I can blame it on them. But at least we're trying.
Shout out to Keystone House.
He's never wrong. Right. But yeah, just to give them an idea again. Somewhere in the neighborhood, your payment's going to go somewhere in the neighborhood of this. We're going to be off $30 or $40, but just be prepared.
Yeah.
And explain to them how an escrow shortage works.
Yeah.
Too. So how you can pay it back.
Yeah, because that again, that's the story is that we've heard on the on the realtor side is, the sad part is you get that call 2 years from now and they're like, I can't afford this anymore.
Yeah.
It's like, what'd you do to it? I didn't do anything to it.
Right. Yeah.
It just my taxes. They had they're blindsided by it. They have no idea.
And you told me my payment wasn't going to go up.
Yeah.
I told you your principal and interest isn't going to go up.
Right.
I said your taxes are in your insurance, which again, I mean, that's I guess sticker shock could probably be, or
For sure.
$100 is a lot of months.
Yeah.
A lot of money when you're not expecting it. And so how escrow shortages work, if your taxes go up $1,200 a year, they put that onto so your payment really goes up $2,400 a month because they got to collect in the rear. Then they got to start collecting what you owe them because they don't wait. They give you some time. You can pay a 1 month same payment, catch it up, and then your payment would be. So if your taxes are going to go up $200 or $100 a month for that first year, that goes up $200 a month because your new payment plus the $100 that you owe them. So that's for that first year or however it's going to be. It could be a pretty big adjustment for them.
Yeah.
For the home buyers.
Yeah.
Yeah. And keep it in mind.
Yeah.
It's a simple question. How long have the sellers own the house? 30 years. Let's look into it. 3 years. You're probably okay.
Yeah.
I would imagine. Non-homestead, homestead, that comes into play too.
Yeah, and that's another important one, right? Like agents that are homestead, not homestead, right? Or clients that are not homesteaded, and then the other piece is that comes into that week is filing your paperwork.
Yeah.
Right. Like
Yeah.
once you do your closing, take your paperwork down to your city.
For sure. It takes 2 seconds. What do we say? I always say it takes longer for you to park the car than it takes for them to.
Yeah. Stamp. Here's
Right.
your thing. Go.
Yeah.
Right. And I sometimes I've just taken it for my clients.
Yeah.
Right. Like.
Yep.
I had clients that were moving up north. They were moving up like Houghton Lakes, so like 3 or 4 hours away. Literally, they closed here and we're leaving.
Yep.
Like they were out.
Yeah.
So I'm like, well, give me your stuff. I'll just run it over to the city for you because I go, you guys got a trailer out, and they literally had to bring their dogs into the closing because they had the trailer and everything
awesome.
was they were done.
Yeah.
They were moving. They were out.
Cool.
Yeah.
Super cool. The one other thing I wanted to give you guys some advice is, I know for us, at 5% down, we can waive the escrows. So talk to your clients about that too. Okay, your taxes may be going up. You don't have to escrow this. So your principal and interest payment is whatever, $1,800 a month. With your tax and your insurance, your payment is $2,400 a month. You don't have to pay that if you're good. Just know that in June and February, you're gonna have tax bills and your insurance bills. So sometimes at work, I just recently went over this with a first-time home buyer yesterday or Wednesday. Oh, I didn't know that. And so he was like, "Oh, well, we're pretty good at saving money." I said, "Well, then maybe it's better for you guys to not put the escrows in and just know that your taxes, that it's due. Then there's no escrow shortage. Then your payment never moves. Your payment never moves."
Right. Right.
Just another tip.
Yeah. The interesting part is
Somebody calling in.
We do have people on the line. Yeah.
Oh, really?
Yeah.
Oh.
But the interesting part is, like, again, you have to explain that. You have to explain that to your clients, right?
Yeah.
And again, it goes back to that relationship. And you and I talk about this all the time. The relationship between the real estate agent and the loan officer is so important.
Yeah.
Because we're all on the same team.
Yeah,
even
sure.
the title guys,
Yeah,
right? Like
sure.
it's we were talking about this, and I teach a lot about leadership with agents, and agents are like, well, I don't, their mind is that they were leading a team or whatever. I'm like, no, you're leading every transaction.
Yeah.
Like you have to be we on the realtor, we should be the coordinator.
100%.
Here's my mortgage, here's my title, here's my insurance,
100%.
right? Because everybody forgets that one.
Yeah, right, exactly. So because you're going to reach into that too, because that factors into the payment. And if it's close on the debt ratio, hey, what's your insurance payment going to be? Okay, well, we need it to be this. There's nothing we can do about taxes. With the insurance, you can take a little bit higher deductible, a little bit lower deductible, kind of move the needle on the insurance a little bit. So yeah, that's a huge part of the transaction. You're
Yeah.
a quarterback or a coordinate, whatever you want to call it, every transaction.
And everybody forgets the insurance part.
Everybody forgets the insurance part about it.
Everybody forgets the insurance. It's just like insurance is like just the assumable, right? We're just assuming that we got insurance. It's great.
Yeah, and again, on my end, if they're putting less than, we have PMI, we have private mortgage insurance too. So all that's figured out. For I don't know if there's newer agents listening, just ask.
Yeah,
you know what I mean, like it's just ask. You guys should know the lending part of it. That's what we do.
That's why you're here,
right? Yeah, for me, I could say, okay, well, this lender's, if I'm a broker, this lender's PMI for this loan is going to be this. This one's going to be this. These guys are faster. These guys take a little bit longer, but they're a little bit cheap. Whatever the case is, and kind of explain that.
Yeah,
it is a team.
Yeah, it is. And the other thing is too, like again, the relationships, right? It always goes back to the relationships. And you do such a great job with your realtor relationships, right? And even with like clients, guys, listen. If your loan officer is not reaching out to your clients that you just wrote a pre-approval for, and going, hey man, like, and you're reaching out to the client, going, hey, how's things going? Is what's happening? And just doing a check-in and a checkup, because I'm checking up too, but it's that we the rising tide lifts all ships, right? So we have to stay on the same page. And if your loan officer's not doing that, find one that does.
For sure. And one other thing, I thought you were going this route. When you put an offer in, have your lender call the listing agent. I can't tell you. When we got the offer, it's for first-time home buyers. Kids are so. Who are you? I call listing agent. Who? I'm what? No, I don't have it. I said no. I'm the people.
Yeah.
Mr. and Mrs. Buyer put this offer in on your house. I'm their lender. I'm not kidding you. The guy says, this is the first. I've been doing this. I think it's 17 years. This is the first time this has ever happened to me. I was like, what? What are you talking about? He's like. He's like, I've called the lender before, but I've never had the lender call. So I'm kind of toot my own horn here, but it's a great tip, and they want to make sure it's not a robot. They want to make sure it's not a big company who doesn't care. It's the person that says, yes, I've talked to John and Jane, and they're approved. They got their income, they got their assets. They're ready to go. It definitely helps for all of us. We want to get it done. Yeah, get to the offer accepted.
It's funny that he says that, because when I'm on the list side, I question if I don't get a call from the loan officer. I'm like, is it you just don't care? Or, you know what I mean? Like,
right, exactly. Or you're too busy.
If I have to reach out, like, because I will, right? If I'm accepting an offer, I'm going to call the loan officer if they don't call me. Right. But you know how when I put my offer in, it's the first thing I do is I call you. I'm like, hey, here's what we're doing. We're throwing this offer together. You call. Then you're CC'd on the email, so the email comes out for both. Like, it's this is who's coming at you. This is our group.
Where we're at. Yeah, exactly. That's a good point too. Or at least reply. Get on the group email and reply to it, so the listing agent knows you're a person.
Yeah.
Go to your closings.
Yeah.
If there's any lenders on here, I don't know. Go to your closing. That's the other one. You go to your closing. I can go to any closing I go to. I would say I go to 95% of my closings.
Yeah.
8 to answer any questions if there's any questions. Really isn't any wire issues or funding issues anymore, but selfishly, 9 times out of 10, you don't. That's the only time you get to meet the listing agent.
Yeah,
make a connection. Same thing for you guys. I know you guys probably all go to your closings, but I would imagine you guys want to meet the other agent in case you do another deal down the road.
Yep.
Who knows if that connection is going to get your offer pushed to the front of the stack next time? Oh, I've worked with Jimmy before. Yeah, he does a great job. His clients are smooth.
Yeah.
Let's take his offer over the other one.
Yeah. Yeah, that literally just happened on my recent listings. That it was another agent. I closed the deal with her. It was a different one of my listings from like a year ago.
Yeah.
She writes an offer on my newer listing, and I really wanted to take her offer.
Yeah.
Because it was so easy the last time.
Yeah.
She just
that makes sense.
And her and I had a great conversation, and we talked, and she's like, my client just can't get up. She just doesn't want to get up to that price, right?
Gotcha,
the price point went kind of crazy.
Right, yeah.
And she's like, I'm like, dang it.
Yeah, right, yeah.
But I had to do the right thing for my client.
No,
I'm like,
sure.
You know what I mean?
But that's a good thing.
But I did want to, I leaned her way because I know how smooth the last one was.
Yeah, that's huge, especially sometimes there's back to back,
right?
Like your people are waiting to close so they can buy a house, and the house that they're buying is waiting for you guys to close so they can buy a house. So sometimes it's that change, it's the biggest transaction of their life,
Yeah.
So,
and then again, too, like you said, going to the closing, that's probably the first time you're face to face with the client.
Right. Yeah, a lot of times. Yeah.
You know what I mean? That's probably the first time you're face to face
Yeah,
with them
for
and actually
sure.
get to shake their hand and
For sure. Yeah.
because everything's over the phone.
Yep. Exactly. Yeah.
You know?
Put on the computer. Yep.
Yeah.
Sure. Yeah. That's a good point.
Yeah. So that's probably the first time you're face to face with them. And then we talk about referrals, right? That's the way to get the referral. Like, oh man. So when they talk to somebody, they're like, oh yeah, the guy that did my mortgage, he showed up to my closing.
Yeah. Right. Yeah.
You know?
Yeah, for sure. And more, I'm doing more, or at least past couple years, I've been doing a lot better too. Like you said, the referral, like, hey, let me know.
Yeah.
Please let me know if you got anybody. Before I used to just assume, now I'm trying to ask, hey, everything went good. You like it? A, give us a review, and B, if you have anybody, let me know.
Yeah.
Let me know. I'd love to help out.
Yeah, reviews and referrals.
Yeah, right.
Don't forget your reviews and referrals.
And I've been better because I've been relying on reviews, so I've been better with giving them. Except like,
right. Oh yeah, yeah.
Even like agents, but also like restaurants, and like I'm like, sometimes I don't put anything. Sometimes I just hit the 5-star or whatever. I don't know.
Yeah, it's funny you say that because it is. Everybody's quick to complain. Right, everybody's quick to complain about service or whether it's a waitress or whatever, right?
Yeah.
Everybody's quick to complain.
Yeah.
And I'm like, I've like the last probably 2 years, I really kind of reversed. I've been quick to like send a good review.
Right, for sure.
You know what I mean? Like everybody gets beat up so bad all the time.
Right.
I mean, the negative stuff that happens in our world or whatever. But like everybody's quick to get beat up. But I've kind of flipped that. I'm like, oh, you know what? She did a great job.
Yeah.
Right.
Exactly. Looking for the gold.
Yeah, like
silver lining.
Yeah. Here, give her a 5-star review, or give him a 5-star review.
Or even if it was, I guess on different situations, if it maybe wasn't the place, but the person was great.
Yeah.
I guess or maybe not so much. The server was great. Oh, you did a great job.
Yeah. I mean, I just had an issue with my truck. Long story, but it was in for service, and the service sucked. It was awful. But the lady that I kept talking to on the phone was fantastic. And it wasn't her fault. Right. That's another thing that people have to realize too. Like, I'm doing everything I possibly can do here, but it's out of my
right. All I can do is make this part of it.
Yeah, I can make this good. Yeah.
Exactly.
So I like propped her up. So I'm like, your service sucked, and I'll never bring my car back there. But she was great.
If you go work somewhere else, right?
Yeah. Yeah. I literally sent a letter to the manager and said how crappy the service was, but she was awesome.
Oh, really?
Yeah.
Oh, super cool.
Yeah. Because I'm like, your service sucked, but she was great.
Right. And some of that's not it's almost kind of like what we do. Like that, she's the front facing.
Yeah.
Right. You don't get to really talk to the mechanic.
Right.
But you talk to her, and she's like, what do I want to do here, man?
Right.
Like, come in, I'll give you a free cup of coffee and a granola bar.
Yeah.
That's about it.
Right. Yeah. But people get mad, and people get mad. They get denied for a mortgage, or they can't get as high as they want to get, and that comes back to you. And it's like, well,
I don't put these rules in place.
Yeah.
But what I can promise you is, once we get going, it's going to be smooth sailing, and this is because there's things that we put in place to make this happen for you, because we know what this, if anything, like the pandemic part of it, because everything was going so smooth, like it taught us how to be better loan officers. Because now we do everything because we had to be, we don't have time for you to wait and get 350, they want 375. Well, great. We've already done that work. We know we're approved for 4.25. Go put the offer in. We don't have time to wait another day to see if you can do 20, because these houses were going, like you just said earlier, So now, kind of shift gears here. Now, I think it made, at least for me, made us better, because now we're collecting everything up front. So literally, when we get it, I get 95% of the stuff that I'm going to need for the whole transaction. Which my goal is, when it comes out of underwriting the first time, title, appraisal, and insurance are the only things that we're hoping, that we need. So, and that's the one thing. So going back to that, we tried for 375, we couldn't do 375. He's good for 3.25, but I can promise you, you're upset about that. Once you find that 3.25 house, we'll have you in 2 weeks.
Yeah.
So
because again, you're not the one loaning the money.
Right. Yeah, exactly. Right.
If it was, it'd be a little stricter.
Right. Exactly. Yeah. That's 325, but there's a decimal point in between the two.
Right.
And I'm gonna need that back on Friday.
Right. With an extra $1. Yeah.
Awesome. So So I guess kind of the sum of that little part is just control. We can control.
Yeah.
It's if your credit scores aren't there, here's what I can tell you to do to get it there, or help in any way that we can help.
Right.
Make it, they're not always a client right now, and I guess it's kind of how I think about it. Even a denial could turn into a referral. Like you just said, they couldn't approve me for a mortgage, but Jason was amazing. Here's my uncle. He's looking to buy a house. He's got some questions. He's run into some problems. You never know. You never know where there's an opportunity on the other end.
Right. You don't, and that's why you take care of everybody the same.
Right.
It doesn't matter if it's a $100,000 loan or $1 million loan.
100%.
It's the same. It's the same person on the other side.
100%.
That gets the same.
Yeah.
It's the same care.
Yeah. I've heard it's only 75,000. It's only 80. I'm like, it's bad juju, man.
Yeah.
You know what I mean? That's somebody's biggest purchase of their life.
Right.
Like you just said, 80 or 800,000. It's. I don't want to sound cheesy, but there's nothing better than at that first time home buyer closing, and they're just, like you said, I've only talked to John, but at the closing, it was John, his best friend, his mom, because everybody is just so excited, that's super cool. So anyways, and I'm saying that because typically the first time home buyers are a little bit lower loan amounts, so not that low because it's their first time, but it's amazing just seeing that smile.
Yeah.
I love them all, but the first time home buyers are.
Well, and then the other thing is too, we have kids.
Right. Yeah.
Right.
That's a good point. Yeah.
So it's like seeing that, like that's the hope, right? Is that one day,
put a smile on their face. Right.
Yeah, one day that they get to buy a house too, right?
Right.
Like,
Exactly.
Yeah. That they move out of yours.
Yeah. Right. Yeah.
No, one day.
Sure.
Yeah. One day.
Yeah.
And then you just miss them anyway.
Yeah. Exactly.
But I think it's cool that the experience that you provide, right? And now as a broker, it's a little bit different, right? Than it is if I were to walk in the X bank,
Yeah.
right?
Yeah.
And it's one of the things that people say a lot. People are like, well, I just went to my bank, or I just went to my credit union. I go there all the time anyway, so I'm just going to use that.
Yeah.
They think it's convenient.
Yeah.
Maybe.
Yeah.
They already have all my stuff.
Yeah.
Like that's the thing, right?
Yeah.
And look, credit unions sometimes
Are amazing. Yeah.
right? Banks,
Right.
Yeah. You could probably beat 90% of the banks out there, right?
Yeah.
Credit unions are a little bit tougher.
Yeah.
But what's that like for you? Like when you get to meet somebody, like overcoming that part of like, I just went to my bank,
Right. Yeah. Or a lot of it too. Well, I banked there. My parents banked there. My parents went through
right
XYZ bank. Just explaining the differences in the extra cost. But the big thing is, this is all I do. Typically, the banks, at some point, they're going to have a conversation about you setting up another checking account, setting up a savings, or setting up a something, which is great, and this is all that I do. I'm not pitching you on anything else. So my focus as a broker, all us brokers are to get you into a mortgage. We could care less what bank you're at.
Right.
We could care less. We could care less if you have a checking or a savings or both or two or five, or let's take it from this first conversation to the closing table. And the only focus we will have is getting into the house, not high yield savings or putting a CD in. And I came from a big bank. I've only worked 23 years. I've only worked at 3 places. One of them was a bank. I was there and it was a great experience, but there was part of our work they gave you a script at some point. You mentioned if they had a checking and savings, ask them about a credit card. If they didn't, ask them about a home. And it was
CD.
A little bit or a CD. Exactly. I take a little bit off the focus, which is all great. Money makes the world go around. But as brokers, brokers are better. Is kind of the logo for us. And I got friends that work at banks and lenders. We know a lot of the same people. But it's just you said your truck. You wouldn't take your truck to the dealership to get air fresheners.
Right.
Right. What I mean? Like you're gonna go to the air fresheners. You're gonna go to to get it. So why go to specialize?
Right.
Work and specialize, and that's what we do. And the service level. Some of the credit unions, not all of them, and some of the banks, they're 9 to 5 employees. They could care less if you need something at 8
Oh
o'clock
yeah.
at night. And that's
on a Sunday.
That's the biggest thing. And what I'm learning now, I didn't know this. Not all credit unions are the same way, but I didn't know this. They get paid no matter what. They're a salary. So whether you're supposed to close on the 1st or supposed to close on the 15th, they're getting their paycheck either way.
Right.
So I don't mind, and I would imagine that we're kind of all the same. I'm 100% commission. I don't close until I don't get paid until we close.
Yeah.
But more importantly, if I screw that deal up, I'm never hearing from you again. I'm never hearing from that client again. Whereas the credit unions and the banks, and God bless them, they just had business walking in the door.
Yeah.
So if this one goes, that's all right. No, somebody else is coming in. Where I built, relationships over lunches, and the networking stuff. One bad deal all deals go bad. They're not all.
Right.
Some deals go bad, but something that we can't control or drop the ball on something big, all that money or all that hard work we just did to build that relationship just went down the drain.
Yeah.
Whereas some place. So to answer your question, I think the relationship is the biggest part of it.
Yeah.
So I just, I have the conversation a lot. I have that conversation a lot with people. It's like, all right, somebody's going to call you from New Mexico, ... lending. Well, they don't care, and they're going to offer you the world. They're going to offer you the world, and they may be a little bit cheaper. But what if they push your closing back 10 days and you lose the house?
Yeah.
And your EMD, because they can't issue denial letter. They're just slow. It's rare, but it happens, and that's one thing. That's the one hard thing to tell up front. So that's why for me, I try to get you guys to tell the story, right? And then it's only experience, and then I don't have to tell it.
Right.
And I can just do my thing.
Yeah, Susie at the front desk is still going to get paid.
Right.
Yeah.
Exactly.
It doesn't matter. She's gonna write your loan. She's still going to get paid. Right. And the other thing is too, this is happening on the real estate side now too. Right. So we're seeing real estate companies who are flat fee, right? And the realtor's on a salary. So like they really
it's flat surface.
Yeah.
That's right.
You want to sell your house or no? Like that's it. That's it. That's the only question you get. You want to sell your house or no? Yeah.
Check the box.
Yeah, check the box.
Yes or no.
Yeah. It's like, well, no. And again, to your point,
who's going to go fight for you? Who's going to?
Yeah.
It's just a flat fee on both ends. So who's going to go fight for you?
Right.
Now you get me fired up. It's too early for this shit. All right. So, but it's. Do you think that like the Miller's thing we talked about earlier?
Yeah.
Do you think that the person who's getting a salary of $130,000 a year is going to make that extra to get with the title company, to get with your escrows, to do it? They don't care.
Right.
You know what I mean? And not all of them, right? Now we're saying in general.
We're generalizing a lot.
We're generalizing that. But it's just human nature, If you're getting your check either way, it's,
Yeah. So we got a question. Dave Petrolius said, "Good morning, gentlemen."
Hey, Dave.
He said, "Jason, I hope all is well."
I hope all is well.
What he's hearing from buyers that have been on the sidelines still waiting to lowered rates to make a move. Any predictions on the upcoming rate environment? Any predictions on the buyer end?
So with this, the big couple of weeks ago, the Fed rate. So I have two thoughts on the Fed rate. I don't know. We all know, we all don't know. The Fed rate doesn't necessarily help our interest rates, right? Mortgage interest rates. But what it does do is get our phones ringing, because most people don't know. The Fed said they're lowering the interest rates. Jason, interest rates are going to be lower. Not really, but and then just go into your thing. Also, once they start talking about the Fed rates, these are some of the smartest people in the world. They've already front loaded that. So if so before we heard it, when did the 17th or whatever they did, our rates started dropping before Labor Day, because they know that that's coming, so they prepare it. So if it does, then they just move them that way, so that they're already moved. Dave, to answer your question, I don't know. I don't know. Of course, I hope. I hope, but I was saying, first quarter is supposed to drop again. I don't think if we got back consistently into the high fives, I think that's where we're going to end up. I don't think we're ever going to see the threes again. I don't think we're ever, actually, I just did my 5.5, but I think consistently, I think that's where we're going to end up, fives. And they should. I mean, we have 2 years of free money.
Yeah,
they got to build that pop back up. And then that's a lender and a realtor saying that.
Right.
But now's enough. We can start getting.
Well, and the thing is, what people don't realize, and I've probably said this on here before too, but like when I bought my house 25 years ago, I think we were at 9.
Yeah. My first one was 01, and I remember it was 8%, and my payment was $888.
Yeah.
I just so.
Yeah. Now, again, because our economy can't sustain that free money,
Right,
Like
right.
you can't just print it.
Everything was, they were giving us money.
Yeah.
We're good.
Yeah, you can't just print money, right? Like
Right.
it doesn't work that way. I wish when I was a kid,
Yeah.
in my head, it was always like, well, how does like, being a kid, like, 14, 15 and thinking like, and you hear things about the country's in debt. And I'm like, well, just print more money.
Yeah. Well, that's what
Makes sense. It's kind of what they did. It's kind of what they did. Yeah. So our dollar isn't worth anything, right? Which again, like as you get older and start to realize like that's just not how the world works, right?
Yeah.
But it's funny because I think like first time home buyers, and they're used to this rate.
Right.
It's not a big deal anymore.
Exactly.
Right. The rate is not a big deal anymore. The only problem is their parents are telling them,
right,
well, that might, you need to wait because the rates will come. We're not going to see 2s and 3s again. I don't think ever.
Yeah.
Like I'm 52.
Yep.
I saw 2s and 3s once.
Well, yeah, same.
So maybe by the time 100 years from now, maybe they'll come back. But I if we get to 5s, I think it'll be great.
And it took a world pandemic to do that, basically. Right. Like, what are you hoping for?
Yeah.
Hoping for another pandemic so rates go lower?
Right.
I don't think that's bad. I don't think that's right.
Yeah, it's not an even. Right. Yeah, that's not an even trade.
And I will too. Like,
we can do this for the kids. A 6-7 rate.
Yeah, right. Ask cost too. So that's the other thing. So, selfish plug. We don't charge. I would say there aren't any Hill mortgage costs. We don't charge an application fee. We don't charge those. Somebody comes in. I can't tell you how many times I have this conversation. XYZ lending ... said they can give me 6.25%. What's your closing costs? Well, they didn't go over that with me.
Right.
You know what I mean? So let's talk about, and then sometimes it makes sense to buy the rate down, but honestly, most times it doesn't. It doesn't make, if 7%, I know it's boring, but if 7% is going to cost somebody an extra, let's say $4,000 to buy it down to 6.75 and it lowers the payment, I don't know, $75 a month. Once you pay that $4,000, that money's gone.
Right.
That's gone. So if rates do drop in 4 or 5 months and we can refinance, well, you've already spent that $4,000 and only $75 a month for these 4 or 5 months, that money's gone. It sounds crazy, but sometimes it makes more sense to take the higher interest rate, and keep that $4,000 and buy wash and dryer or whatever.
Your hot water tank goes out.
Or your hot water tank goes out.
Yeah.
It's going to last you years.
Yeah.
That $4,000 is only going to last you a couple of months, a year maybe, or whatever the case.
Right.
So have that conversation. That sometimes cheaper isn't always better.
Yeah. Well, it's always the same thing too, right? Because I've had that same question about people like putting a large sum down.
Yeah. Yeah.
And I'm like, what? No, you don't need to put that much down.
Yeah.
Because what if you want to change your carpet or paint or now, unless you have the money,
the large sum down, but all of it, right?
Yeah.
Exactly. Keep some.
Yeah. Again, because it doesn't necessarily, you're not going to save enough.
Right.
It's not affecting the payment enough.
And that's one thing I would tell you guys to ask your lender, go over 5% we're here, 10% here, 15, 20. This is where we're at in payments. All right. Difference between 10 and 20, and let's say it's another, whatever, $20,000 is only $68 a month. Well, why don't you put that $20,000 in case. Right. In case you're whatever, whatever.
Right. Right. Yeah. I have, and it's funny because I have people that are like guys that I grew up with, and they'll call me, they'll ask me mortgage stuff, information, should I refi this or should I do that? I'm like, don't do anything right now.
Yeah,
like,
right.
And then like, how'd you know this stuff? I'm like, if I didn't get into this business, I wouldn't know it either.
Yeah.
You know what I mean? Yeah. And I started on the mortgage side and got out of that into real estate, but like at the same point, if I didn't do that, I wouldn't know this stuff either.
Exactly.
Like, you've probably got friends too that are like, that'll call you and go like, and sometimes I think like, you an idiot, like you don't know this stuff. And then I think, I do this every day.
Exactly.
Sorry.
Exactly. Yeah. And it does. I mean, I'm the same as you, man. It doesn't make, sounds salesy, but if it doesn't make dollars, it doesn't make sense. So
right.
If it's going to cost you $4,000 to save $26 a month, that doesn't make sense to me. You know what I mean?
Right.
I've done a couple of refis. Unfortunately, like a divorce situation, I think we did their mortgage that they were at 3.27 and they're getting divorced, and I had to refinance that the husband was keeping the house. So he got hired, but he had to do it. He didn't want to. I was like, well, she had to come off the mortgage. She was going to buy another house. It's going to be ex-wife. So But again, it didn't raise his payment that much. I mean, when I say that much, I think it was like a couple $100 a month, but it was a bigger loan. It was $325,000. He's like, all right, well, I can deal with that. And if they drop again, I said, yeah, if they drop again, man, you have to. We wouldn't, if you called me to say let's refinance, I would have told you no, but it was a situation with that.
Yeah. And I've had a conversation with a client too, just recently, and they're like, we can't afford to move. I'm like, well, all right, so let's talk about that, right? Like, let's talk about that. And it was, well, if our rates go up, they were like a 3%. If our rates go up, we can't afford anything. And I'm thinking, if you shouldn't have bought the house you're in then.
Right.
If you're that tight, if you're that too close to it at the 3%, you probably shouldn't have bought that house, right?
I never thought of it that way. You're right. Exactly.
Exactly. Yeah. And I'm like, that's, so whoever put you into the house, you and again, I'm digging through them right now. But like finding out, like, when did you buy that house?
Yeah.
Right. Because that's the key too. Because if you bought at the top when everybody was going 30, 40, 50,000 over asking, 60,000 over asking, people were overbuying houses. Right. Now that doesn't mean that their equity wasn't still going up or they weren't gaining it. But at the same point, some people were going negative right away.
Yeah.
Because they were, these appraisal guarantees, right? We talked about that a little bit, before we started. They're sort of still there.
Yeah.
They're popping their head up every once in a while now, because it's a concern. You get burnt on one appraisal, and you're like gun shy, right? I just had one come 30,000 like.
Yeah.
We just had to meet in the middle.
Yeah, right. Yeah.
Right. They brought 15. They brought 15 extra in. We went 15 down in price, and when we closed the deal, because we were like, and I it was my listing, and I fought for I'm like,
yeah.
Again, that's all I can do. I can't. 30 is a lot, but
30 is a lot, but typically when that happens, you could kind of tell that the agents have been doing it a while because they're like, okay, I was thinking maybe 20, but 30, okay, and it's I can't believe it starts getting nitpicky with those. We come in, well, this one has granite countertops in it. That doesn't make that much of a difference.
It doesn't.
It's typically size, bedrooms. They do a condition report of new build to tear down or whatever the case. But typically, it's typically the size, and it's always the lender's fault. Oh, when the appraiser comes along, like, listen, I can't. I'm not even allowed to talk to the appraiser.
Right. There's a reason that they stopped. That it's not the. It's not.
It used to be that way. Back in the day, we could call the appraiser right on the cell phone. But we don't want it to come in. So you guys know, we don't want the appraisal to come in low either.
Correct.
That's the last we want. The one I was telling you about, earlier, when it came in, at first I'm like, oh man. I'm like, here we go. But it's deflating.
Yeah,
it is. But if it's kind of padded in, and I know you've had a conversation with yours. So, all right, we're gonna list at 350. We're gonna accept the 350. Prepare. For 325. You know, and then if it comes in at 330, all right.
Yeah.
So
and it is hard. And but I will say, for agents, when the appraisal's happening, meet your appraiser at the house. Realtors, go to the appraisal, right? Meet them there. And I've had appraisers, like, I'll bring coffee or donuts or whatever, kind of suck up to the appraiser. Right. And I literally had one guy go, I can't take anything.
Yeah.
I'm like, it's a coffee.
Yeah.
Like,
there we go.
And here's $100.
Here's a coffee, but you're gonna want to check underneath that cup. There's something taped at the bottom of it.
Right.
Just kidding.
Dave's got another question.
Come on, Dave.
So it's a long one. So he said, Jason, I know it's an individual decision based on the client, but with a lot of our potential first-time buyers that appear to have a student loan debt viewed as a barrier to entry in purchasing a home, do you have any ways around it by looking at future earning potential? There's a lot of this generation that want to purchase, but rates keeping them from jumping in.
Yeah. So the student loan, the two things on the student loan. There's, to my knowledge, there's no way around it. If the payment is showing up in the credit report, that's the payment we use, unless we can prove. If you guys ever seen student loans so if somebody says they have 30,000 in student loan, it's usually 4,000, 5,000. It's 7 or 8 different student loans. So some of those payments aren't showing up. So what FHA does, if there isn't a payment showing up in the payments, and let's say they owe 10,000, we have to include 0.05 as a payment for that. If it is showing, we use that unless they have paperwork, because typically it's all one lump payment. So they can use the paperwork to say, okay, all these payments show $350. I'm only paying $275. we can use that. If it's conventional, we have to use 1% of the balance as a standard payment. Some of these, if they're in a program where like nurses or schools get rid of the debt, if it's within a certain amount of time, and I think it's 3 years, don't hold me on that, and we can show that, then sometimes we can eliminate that student debt. Like they're not going to have this for another 3 years. If they've been at this job for 8 years, in 2 years, the administration is going to pay it off. I forgot what they call it, but student loan forgiveness. If you work with a school district for so long,
it's schools, it's hospitals, first responders, right?
So like sometimes we can go around that. But to answer your question, Dave, there's really no way around it. There's really no way around it. Now the student loan, that's different. That's criminal. The student loan debt that these kids have to, like in these rates, and then something like IRS taxes and student loan debt are the only two things you can't ever file bankruptcy on or ever get rid of.
Right.
And we see it, Dave, and it's a teacher that's got their dream job and they're making, $70,000 a year and they have 140. They're never going to be able to pay that off, And I think that's why these school districts have come in and do that, which is great. It's phenomenal.
Well, and it's hard. Like these are the discussions we have to have with our kids too, though, right? Like this next generation of kids, like it. And look, who was it? I think it was Warren Buffett or somebody just came out recently and said, in the next 10 years, we're going to have a shortage of electricians, plumbers, all these skilled trades. We're going to have a shortage of like 100,000.
Yeah.
Because everybody's retiring and getting out of it, right?
Yeah.
And for those of you that, I don't know if you've ever done construction, I have.
Yeah.
It sucks, right? It's hard on your body.
Yeah.
Right?
Yeah.
Like, and I got buddies that have been doing, like my one buddy's an electrician. He's been doing it since we were 18.
Yeah.
He's 52.
Right.
Like, your body, your hands hurt. Like, people don't understand how hard it is, right? Physically. And then, but so there's nothing wrong. Like the trades, those kids that are going into trades now are just going to print money.
Right.
Because
guys, we're about the same age and our friends, those guys are in unions. They have amazing pensions, amazing. My one buddy, the guy you saw
we're the dumb ones
on Sunday, we're the dumb ones. He just turned 50. We're a month apart. He's like, I'm going to retire in 4 years.
Yeah.
I'm going to get my pension, and then I'm going to take another job with the company and get a pay. And he's been doing this since we're 18, construction, So the trades are phenomenal. Trades are, but I'm not handy at all. I'm the same way,
I'm handy, but man, sometimes that's not good either.
Right.
And everybody's like, hey, can you come fix this? I'm like, oh man.
But I always talk about I got two tools in my tool bag. Pen and a checkbook.
I love it. Tom Tillier says, my guys.
Hey.
Two of my favorites.
Oh, thanks.
But yeah, I think that, again, the future looks bright. I think kids we're learning, right? And I think the rates are going to shift, right? And again, tell your grandma and your mom and everybody else that because the Fed dropped the rate doesn't mean the interest rate
right
dropped.
Exactly.
Because earlier this year when the Fed dropped the rate, the interest rates, mortgage rates went up.
Sure. And again, just the flip side of that coin, kind of what I tell my guys or anybody I talk to is it's making the phone ring. Turn those lemons into lemonade. Like they're not, but we can do this. Oh, by the way, who else do you have? First time home buyers, I've been kind of all the programs, all the benefits are built for first time home buyers now. Like they get a lower interest rate, they get, it could be 25, 1,200. Some places give you 25,000, for first time home buyer incentives, which is great because again, typically first time home buyers are younger people. So get people into the market. When they buy, then their friends buy, and then in 10 years their kids are going to buy or whatever the case. So ask whoever you're working with about any first time home buyer, benefits.
Yeah.
And there's down payment, FHA, we can do a 1% conventional, most brokers can. So there's definitely programs out there.
Yeah, for sure.
Yeah,
for sure. Yeah, we got about 5 minutes left. You do a phenomenal job of networking. Like your networking events are, and I know it's a pain in the neck for you.
It's fun. It's fun.
Yeah. But when are your networking events? Like, because you do one at the yacht club, right? And so when are your networking events?
The third Friday of every month. We do a lunch and learn, and you guys have been, to a few of them, and I appreciate the support. and we have somebody that's real estate related.
Yeah.
I mean, it's not me up there talking about interest rates. Somebody wants to hear about that stuff. Last month we had home inspector Stripling did a great job. It was a 1 hour C credit. This month actually it's the third Friday, whatever that is. Somebody could tell us. I think 17th. We have a will and trust lawyer.
Yeah.
Like when you have this stuff in place, and do the stuff. So I know in the area, Rick Linnell is our speaker in November. So it's the third Friday of the month. Grosse Pointe Yacht Club. All real estate, agents are invited, and we just try to do something, something different.
And look, if you guys haven't seen the yacht club yet, just go see the yacht club.
Yeah, right. And free lunch. It's all on a Friday. The worst case scenario, you're going to get a free lunch.
And maybe some continuing ed.
Exactly. Yeah, and we'll post it. I mean, if you guys, if I don't have your email, send it to Jimmy, and we'll get you on the list. But it's something that you guys, and we try to make it interactive. It's not typically 45 minutes. We try to keep it around there, and you're not sitting there staring at somebody talking on a stage that's 10 feet high for 8 hours, which those are great. But it's 45 minutes, very interactive. Ask questions. We do a little networking before. Sometimes we do a lot of networking after.
I've been there for those too.
But it's all great. And and when I talk to these agents, and the biggest thing, and Stripling and I were kind of we started this, 4 years ago. It's why are agents going to want to sit with other agents? And at first I was like, yeah, that makes sense. But now it more becomes, because you never know. Like we just talked about earlier. Now saying, oh, we had that Rosedale closing, or man, I got I hear a lot. I got this one that's stuck, and I had that. Try this.
Yeah.
If you're trying to be nice, if you're too, if you think that you can't learn, what is it? If you think you're the smartest person in the room, you're not. If you think you can't, same with me. I'm throwing Droge, Dante, like we're all different, but we're buddies, and we pick each other's brain every once in a while.
Yeah.
Like, hey, but I ran into this. Like I think the days of I'm not gonna, because they might steal my clients. They might.
Yeah.
So go back to your networking thing. We're trying to get everybody together. For us, again, I'm 100% referral. So try to, give some back to you guys and said, hey, can I come and have coffee and let's get everybody together and let's show some work to you guys.
Right.
To get back. So it's the third Friday of the month, third Friday of every month. In January. Sometimes we're getting back to our roundtables, those Thursday roundtables.
Yeah.
After we'll get about 12 agents together, just kind of roundtable.
Yeah, and after those events are.
Yeah, we got about that one worked.
It did work. Yeah, we worked that deal. We after a networking event, we were sitting at a bar, and the girl at the bartender was like, "Hey, are you guys still in houses?" Like we think. And so that literally we just sat in a row. Like I said, all right, talk to Jason first, then you come talk to me, and then you go talk to Mike Bayshore, right?
I'm Mike gonna
he tried
some more. Right.
I'm like, you're the insurance guy. You come in last.
But that's what that's about. Yeah, it's all. I mean, and it really has helped. It has helped to get to know more people. And honestly, we talked earlier about calling the pre-approval, and then we got to go. It's get your name out there. It's
100%.
It doesn't matter one time. It's with this business, like, all right, it's better than, like you said, all these robot agents or whoever they are. It's like, oh, I did meet you that one time. Okay, I know it was only for 5 minutes, but you feel like you've known them.
Yeah, these AI agents.
Yeah,
right. AI agents. So Jason Kaleta, Hill Mortgage.
Yep.
Where's Hill Mortgage, man? It's in a great spot. It's in a great location.
Yeah. We're on the hill. That's where the name came from in Grosse Pointe Farms. We'd love anything we do to help. Any questions, you get through Jimmy, or kind of look us up.
Yeah.
Thanks for having me.
Yeah. I appreciate it. Go Lions. Got the helmet out. He took the headgear off.
No, and it fell down. I was trying to pick it up with my foot to show you guys again, but it's down there, Rory. So,
man. I love it. Thanks for joining me again today, coming in studio. I appreciate it. And then go Lions. Good luck. Drive safe.
Yeah. We'll have a good time.
You got it. And cheer the Lions on hard. We'll be good.
All right. Thanks, guys. Thanks for the questions.
All right, guys. We'll see you next week on the podcast.